Reliance Capital is possibly the first non-bank financial company in India to attract a resolution value of 9,000 crore rupees via e-auction under the Insolvency and Bankruptcy Code or IBC. That's the amount the Hinduja group had belatedly submitted in an attempt to outbid the Torrent group to acquire Reliance Capital. Earlier, the Torrent group had emerged as the highest bidder for Reliance Capital with a bid amount of 8,640 crore rupees. However, despite being the highest bidder, the deal was not sealed for Reliance Capital. Competing resolution applicant, the Hinduja group, had belatedly submitted the 9,000 crore rupees proposal on December 22nd after completion of the challenge process on December 21st. This was only after learning that Torrent Group had emerged as the highest bidder. In the e-auction conducted under the challenge mechanism, Torrent had outbid Hinduja's earlier offer of 8,110 crore rupees. The Committee of Creditors or COC had fixed a floor value of 6,500 crore rupees for the auction held on December 21st. Sources say Hinduja's post-auction offer was 100% cash upfront, whereas Torrent Group offered only 3,750 crore rupees as upfront cash, which is 54% lower than the Hinduja offer. But what's the idea behind this Hinduja move?
Bidding has its timeline by which people have to bid, and if this is allowed while allowing bidders to change their bids or the terms of the bid beyond the bid period, it creates a bad precedent. So I think NCLT has in its wisdom and rightly so held that it should not be considered. Having said that, sometimes it's just a strategy that why don't we throw a price just to give a hint to the relevant stakeholders that we are willing to up our stake, and it just kind of puts everyone on the toes. And while knowing, like I said, knowing fully aware that this is not going to be accepted because it is not as per, or it is going to prejudice the other bidders. But at the same time, the COC has not made up their mind, and in the next meeting, I'm sure it is something. While they will not consider the revised bid, but they can always say that this is the price that they could be expecting, and there is one bidder who is willing to give that. So these are all, I would say, evolving strategies.
At the hearing on Tuesday, the counsel for the COC informed the bench that no final decision had been taken by the COC as all the offers are under process for legal due diligence. The counsel for the COC sought a week's time to move the National Company Law Appellate Tribunal. The Hinduja Group was not represented in the court. The next hearing is scheduled on January 12th. The COC meeting, also held on Tuesday, remained inconclusive due to the ongoing litigation. In the meeting, financial advisors, Deloitte and KPMG observed that besides the huge gap between the two upfront cash payment offers, Torrent had also proposed deferred payment of 3 to 5 years and without Torrent Investments' corporate guarantee offered in the first round and at zero interest. Lenders prefer to give higher weightage during voting for upfront cash so as to free their capital earlier. Valuation reports by Duff and Phelps and RBSA advisors pegged the liquidation value of Reliance Capital at 12,500 crore rupees and 13,200 crore rupees respectively. But why are the bidders making offers lower than the value of assets? Modi has this to say.
The resolution professional appoints two valuers under the IBC. Both the valuers are given a mandate to arrive at two valuations. One is a fair market valuation and the second is a liquidation value. This is the value that will be derived after selling the assets in the liquidation. The bidders are giving the bid based on something we call it IM, Information Memorandum, which is the information that is given by the COC to all the bidders, based on which they make an informed decision that while legally it is possible for a bidder to bid less than the liquidation value, there's a Supreme Court judgment on that. However, the chances of a bidder for the committee of creditors to accept the bid which is below the liquidation price is commercially not viable. Why should COC accept a valuation less than the valuation that they would get if they were to simply liquidate the company and get it from market? But now, of course, there are practical nuances like when will the sale happen. It is a time factor, it is a cost factor, and based on that the COC may take in its wisdom, and that is a discretion that the COC has, whether to accept such bid which is below the liquidation price. But under the law, they are allowed, bidders are allowed to bid a price below the liquidation.
So, do we see a trend among bidders making offers lower than the value of assets? Hemang Parekh of Delhi-based DSK Legal says,
I would say that there is no trend here. It's more of a strategy that each bidder deploys, basis, of course, the financial situation of the bidder, the resources that the bidder has, and so on and so forth.
but what should be the NCLT's position in negotiating such deals? Parekh says,
The objective of NCLT is to get the maximum value for the lenders. And therefore, if there are certain, I would say, minor technical points here and there, then it is possible for NCLT to overlook it, given, of course, the larger framework of the law in place. It is not always about going by the technicalities of law, but sometimes NCLT, wherever it sees an opportunity or if the situation warrants it, will look into the spirit of the law and accordingly grant reliefs.
Thus, while the NCLT's decision to offer relief to the Torrent Group is seen as a preventive measure against setting bad precedents, experts point out that strategies used by the Hinduja and the Torrent Groups aren't uncommon in the M&A ecosystem. It is therefore the NCLT's prerogative to negotiate a bidding process where the moves are not necessarily illegal but tends to go against fair practices.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.